Thank you, Janice. Notice that I brought all my notes. First things first. Howdy. Howdy. One more time. Howdy. Howdy. Everybody's an Aggie, including Sue Coffey's oldest son, who I've yet to talk with. He's thinking about UT, University of Texas. No way. Don't do that to him, Sue. It's good to be here among friends as well as new friends. Those of you who are at your first meeting, I welcome you as well. You've got awesome responsibilities within your states, and I know that you will handle them very well as those around you have been doing for many years. Yes, it was a privilege to be asked to serve on the PCC by the Texas Society of CPAs, and then serve as chair by the state board in Texas as well as NASBA. I appreciate the endorsement. My dog does not appreciate the opportunity, I'll assure you, though. He still talks with me quite often about this role. Do we have, right here, we have slides. Diane Rubin will be giving this presentation or this update to your group at the meeting in Chicago. I will be fishing. What I want to just cover with you quickly today, how many of you know what the PCC is or is constituted to do? Could I see a show of hands? How many don't have a clue? No, I'm not going to put you on the spot. I did this with 1,200 people in Dallas recently. About 20 knew what the PCC was. So, they were there because it was an hour of CPE. And they liked it better because John Cornyn spoke the year before and they didn't get any CPE for it. Actually, what I want to cover with you today is what the PCC is. Very quickly, I want to flash through a lot of these slides. All these slides are in your book there. I encourage you to go through them. I'm not going to read them to you. I'm not going to go through them too slowly. We have a lot to cover in just a short period of time, especially if we want to cover any questions or if we want to defer questions to later. I'll be here throughout the meetings because I'm very interested in everything we're talking about here, obviously, not just this topic. Give you a quick perspective on the FASB, what the PCC is, how it's really connected to the FASB and the diligence process. I use that term a lot for promulgating accounting standards, and then what our activities are to date and what the outlook really is going forward. You're all aware, or most of you may be aware, that the PCC exists largely because of a growing concern out there within private entities around the country that was manifested in this blue ribbon panel that the AICPA, NASBA, and the Financial Accounting Foundation put together a couple of years ago in 2010. A lot of issues out there. I won't read you these things around this chart, but you can probably resonate with a lot of them out there. A lot of massive change in accounting standard setting, big questions of relevance and complexity that evolved fairly quickly over the last 5 to 10 years with regards to private companies. And so this whole issue of relevance of accounting standards to private companies, the 25 to 28 million of them out there, including Atkinson Candy Company. And by the way, if you haven't been to your local Walgreens or somewhere, buy some Atkinson candy. It's good for you. But private companies really were concerned about this issue, and we started hearing things about big gap, little gap, public companies, private companies. There's 15,000 public companies. 14,000 of those, I will assure you, share the same grief, concerns, complexity, cost-benefit issues that we're dealing with private companies. And so this is our efforts are getting a lot of attention, which means we've got to get a lot of good input, and we'll talk about that as well. But that's the landscape. Standard setter process. The FAF, the Financial Accounting Foundation, set up as an independent foundation that hires and retains the FASB, the GASB as well. You can say the PCC, but they don't pay us, so we're a little bit more independent. But the FASB, the 7 FASB board members, I can't remember how many are on the GASB that David Vout chairs now, but they promulgate standards for general accepted accounting principles for both public and private companies at the FASB, and of course the GASB for governmental accounting standards. And they are in Norwalk. They all get paychecks with FAF letterhead on them. The FAF is funded through the Sarbanes-Oxley and Dodd-Frank Acts, which allocated money in addition to the money that the FAF generates from selling literature and things like that, which tells me why it's all so long. The funding comes effectively through Congress and through that allocation because the FASB has been outsourced from the SEC to promulgate accounting standards for public companies. So you've got this strong line between the SEC and the FASB. The SEC at any one time can take back standard setting, if you will. They won't, but they could. So the FASB has to have a strong relationship to the need by the public markets. But there's this growing concern of the private markets and the fear that there could be major differentiation, which could be very disruptive, could lead to accounting standard setting that's not a product of independent, objective diligence process that we see today with FASB standards. So the PCC was formed to be an adjunct, if you will, to the FASB and to bring in the angst, the why not type questions and these sorts of things, and begin to deliberate and look at areas where there could be modifications or exceptions to private company GAAP different from public company GAAP that would seem to make sense, not destroy theory, not destroy other things like that. The FASB is supported by a number of constituent committees, including FASAC. I know that Sue Coffey sits on FASAC. Appreciate her doing that, as well as the others who sit on the many FASB committees that provide good input. There's a Small Business Council also that provides some input, and others. I have NASBA listed here. We all know our responsibility as state board members. We literally give, within our states, we give the responsibility to the practicing CPAs that sign the test reports and the like. We assign to them the responsibilities for upholding the public trust, including the basis of standards they should follow, whether it's compilations, reviews, various attestation standards, or audits. And we have a lot of rules that the profession has promulgated over the years that we follow in our states for good reason, and that is that CPAs are trusted business advisors, trusted technicians who understand GAAP and GAAP financial statements and any iterations from GAAP which may be out there, cash basis, tax basis, or others. And so that trusted advisor, if you will, franchise that we have with the public is very important. That's why NASBA, I have listed on this chart, it has that ownership within the states and must be respected. AICPA, clearly, from the public standpoint, the trade association of CPAs for all the right reasons, notwithstanding education, input to the states, input to the federal government, and all the other many things that the AICPA does, including quite quality input to standard setting by the FASB and the GASB. FASB organization, I won't go through this, but there's an organization, they have a budget, they meet in Norwalk. I call it the accounting hood. It's been there for a long time. It's a nice part of the country. It's not necessarily a garden spot to go vacation. If you're going to go standard setting, there's a lot of hours, a lot of work in that building that are done, a lot of respectable people, and a good, credible staff there with all those resources at hand who all work with the PCC as well. The FASB promulgates accounting standards now through the codification, which is, I call it the Dewey Decimal System, these long numbers, codification. I'm still getting used to, or trying to, and changes to the authoritative U.S. GAAP are made through ASUs, and ASUs, there's 3 drafts of ASUs today from the results of our May meeting that will be pulled together and probably exposed later this year or later this summer if my initiatives hold up relative to changes. So ASU is the vehicle for making changes to the codification of U.S. GAAP. All right, where am I? Let's go. Okay, I'm not going to go through this. Suffice it to say, if you look at this chart and the next one that's in the book, standard setting process is very diligent, has many points where public input are gathered, expert inputs gathered, many constituent groups have input, there's exposure, there's comments, there's re-exposure, then there's more deliberation, all done in a public setting, and it sometimes takes longer than it should, but there's many, many factors that go into it, especially when you're considering international standards and the convergence process between IFRS and US GAAP that has an input as well into this for all the right reasons. But the emphasis here is the diligence of the process that the FASB, GASB follow, and the broad participation by these various groups that I mentioned earlier as well. I won't go through all those, but again, they're in your book. The FASB does engage users a lot. The PCC is defining how we want to engage users. One of the things that we're doing is reinstituting the roundtable, but I've added a slash in the word town hall because I don't want to have input gathering processes at the PCC that are relegated to 18 to 20 people around a table. We're going to do it in an amphitheater type setting at major colleges and universities around the country geographically and where there's substantial accounting programs. And our first one unofficially will be November the 4th at Ohio State in Columbus, Ohio. And we'll have a room full of people, a good-sized room full of people that will be invited from different constituent groups to give input in addition to those who are sitting at a panel. So I'm just trying to stretch this a little bit because somewhere in the room comes good ideas and concerns that we may know about what we're not focusing on. So this input process through roundtable / town halls will probably occur, if I have my way, I ask for 4 times a year, it'll probably be 3. If we get 2, I'll be mad, but I'm shooting for about every 4 months to have this process around the country, and it will be visible, it'll be recorded, and it'll have opportunities on the internet for a reproduction and/or input in that manner. Emerging Issues Task Force interprets GAAP, takes issues that the SEC and the FASB collect, and they go through and issue Turbo GAAP on Friday afternoons, and then of course all these deal makers have end-around structures by Monday morning, which is one of my pet peeves. They asked us if we wanted to have a PCC representative on the EITF, and my response was, how much reading? When I got the answer, I said no. So what we'll do is we'll be a force in the room. There'll be representatives of the private company stakeholders in the room with the EITF. The chair of the EITF, Sue Cosper, is also the prime coordinator with PCC, and all the staff work for Sue. And we will have plenty of input through Sue and through the staff in the EITF process. And we will be the unseen bear in the room, if you will. My comment to them was that if you have issues that have private company implications, you want us to be engaged in the issue as it occurs, because we will make changes to it if you don't address them. It's just a real silent threat. Our objective is not to be everywhere and do everything. Our objective, I believe, is to change culture. And there's always a decision that we make, each of you and I, in a business environment, which is, what are the people costs? After you put your pencil down on the technical issues, what are the people costs? That's why we're involved in things like this, things in our community, is to develop that psyche. Likewise, the PCC's responsibility, as I take it on, and as I see it, is to change the culture of what's the private company implications every time a decision is made. And we can't be everywhere to do that, but we're fostering or trying to foster a change in that culture. Private Company Council now, as you know, it was established by the FAF on May the 30th. It's overseen by the FAF. Mac Lawhon, who chairs the Private Company Committee of FAF, sits in on our meetings. He does not participate for 2 reasons. 1, he shouldn't. Number 2, he's a tax guy. He doesn't understand what we're talking about, and he openly admits that. But he's a great friend. He's from Fort Worth, Texas. Weaver and Tidwell, or Weaver LLP, is the former chair. And we have a great working relationship, and he's really the person from FAF that's charged with helping to make this thing work. We meet in our public meetings with the FASB. They all sit in our meeting and actually participate every time we deal with an issue, and it works. It's very good, open, it's collegial, it's all following the strategy, and I'm very pleased with the way we have gotten started with a working relationship with the FASB. We lay all of our hands on the table. We're focused on one objective, and we have mutual respect for our needs, as their needs being broader than just private companies, as well as the interaction they have with the SEC, and particularly the chief accountant, Paul Beswick, who is very supportive of the PCC and who attended most of the Blue Ribbon Panel meetings on behalf of the SEC. But the private company body is an advisory body to the FASB, and we have two responsibilities. One is to perform look-backs on existing standards and see where there's angst, where there's relativity issues or relevance issues, see where there's cost-benefit issues, and try to get input from the public. We had some input from roundtables that the FASB has been having over the years, a lot of input that came in through the Blue Ribbon Panel process, and then we now have to try to gain additional input as these standards are issued and as they evolve as to what the angst is. And there's a lot of it out there. Some of it's very pointed, very easy to put your hands around. Some of it's very pervasive and will require some adjustment by the FASB as a whole, which is why we meet. We've talked about a lot of broad issues in addition to those that we've dealt with initially, and I can assure you that there is an opportunity for a lot of broad issues to be revisited. And then how does all this face, before I go into this agenda process, how does all this interface with international financial reporting standards? The FASB is still working on the convergence process, which is a long-term process of converging standards as they are promulgated by the IASB, International Accounting Standards Board, and the IFRS standards that they promulgate, converging those one by one with the FASB's new pronouncements. Revenue recognition is one, lease accounting is another, and there's others that are out there, past, present, and future, that are part of the convergent process. We are not dealing with convergence, but we are mindful of the issues and the complexities of the convergence as we ask our questions and do our research onto different topics. This is our process. We basically identify an issue, talk around the table, things come to us from roundtables or other venues, which is where you come in. We've got to get issues from you. We discuss these issues. We determine if we should do a little pre-agenda research on them and see if it takes traction. If there's, based on the research, there's issues, we ask the staff to limit it to 10 pages. It generally comes back around 20. We then meet at the next meeting, go through it, determine if any of these items should be formally put on our agenda, and then we will give some direction, some scope setting to the staff so that we can be focused on our concerns and not broad concerns that they may bring up. They bring those issues back to us at a meeting, and then we decide if we want to promote an auditing or an accounting standard update, an ASU, which we've done on 3 occasions now. So that's kind of how that works. And this, then goes through, once we have an agenda decision, which we've had, it goes back through the FASB for their endorsement process. If they endorse it on a majority vote, that's fine. If they don't endorse it, they have to tell us within 60 days that they did not endorse it, why they did not, and what we should change to it for them to endorse it, which is a pretty good process. Of course, I don't expect to have any problems with endorsement because they're all sitting in the meetings with us when we make the decision. So I'll look at them and say, this should be easy, guys. Just approve. You want to approve it here today? Okay. We'll at least push them. But then you have the exposure drafts that then come out and goes through the rest of the process of standard promulgation. Will we end up with separate GAAP? No. Financial statements inclusive of changes or inclusive of accounting standard updates that have allowances for change or for modification or exceptions for private companies is still GAAP, and that's the intent. It comes from a diligent, independent, objective process that's outside influences, and that's why it's important the way this thing has been set up. And so I mentioned the PCC has to have 2/3 supermajority on any issues. And the way I get the 2/3 is I'll go around the table. I ask everybody to, and they're very engaged in the topics, in all the discussion, very helpful. And I have to hold out Diane Rubin to each of you as well. She's doing an exceptional job on the PCC, and I really appreciate her being there and the input. Okay, I mentioned the liaison, the endorsement process, the staff. We use FASB staff. Why? They're trained at this. They're good at this. Are they learning to adjust to some things with us? Sure. It's just anyone on the NASBA staff had to get used to me as well, right? Or the board. Okay, first thing we had to do when we met in December was come up with this private company decision-making framework. It was something that was promised as a part of the Blue Ribbon Panel process, was that we would basically come together with a document that's out there in final exposure now, which identifies and provides alternatives within U.S. GAAP in 5 areas based on differential factors. And we just talked about what some of the issues are surrounding private companies versus public companies, and these things here are listed. But basically, it provided us an opportunity to discuss with the FASB the roadmap going forward, where the restrictions should be, where they shouldn't be. I'll give you an example. One of the proposals in this decision-making framework was an all-or-nothing approach. Should companies that adopt a modification or exception for private companies have to use every modification that comes down the pike or not be in accordance with GAAP? Well, it was a no-brainer. It was obviously no, we can't do that. Many issues are relevant to private companies, many issues are not from a materiality standpoint or that sort of thing. It should not be on an all or none basis. So we all got many of those who were concerned about that back to the center on that issue. And then we had a discussion on industry. Should industry data, should industry requirements, industry restrictions be a good reason to not make changes to GAAP for private companies? A lot of discussion. The answer was no. Relevance, cost benefit derives this, not industry standards and not the all or none, things like that. So the decision-making framework was very helpful because we had a lot of discussion. It enabled us to get to know each other well. We have it out there as an exposed draft or exposed document now. It should get approved sometime this summer based upon the final public input. And it will serve us well because when we get some of those sticky issues, we'll pull it out and we'll talk about all the environment around the private company to get this thing dislodged and to move it in the right fashion, which is the private company fashion, obviously. First meeting, we talked about issues. My whole concern was getting through all the morass to get to the issues because that's really what we're all about. And that's what you're anxious to learn about as well as the market out there, the stakeholders. And so how are we doing on time? 10:19 still okay, right? You got no hook, okay. We talked about intangible assets other than goodwill acquired in business combination. We talked about variable interest entities, plain vanilla interest rate swaps, and uncertain tax positions, all of which are exciting topics, exciting topics. My dog goes to a tree every time I mention them. And we asked the staff to go do pre-agenda research on these issues for our February meeting. We came back in the February meeting and we said 3 of them ought to go forward, 1 of them probably shouldn't. We talked about the FIN 48 or the uncertain tax positions. We tabled it. We didn't eliminate it, but we tabled it. Am I on the right slide? Yeah. See if I can read that. Yeah. Bought these glasses in 2007. I think I can still read. But what we decided was that FIN 48 was hard, but we couldn't find unjust reasons or just reasons for providing a modification for private companies in uncertain tax positions. What we found is that during around 2010, when the Blue Ribbon Panel was meeting, that there was a lot of angst over the implementation of uncertain tax positions among private companies. And I had the same angst. But what we did when we looked at it 2 years later and began to get some input from private company stakeholders, users, preparers, and auditors, what we found is that they said, well, it's kind of behind us now. It was hard. When you have tax allocation or tax issues in 40 states, if you operate in those states, you're required under the standard to make a decision as to what the most likely scenario is for those states if they knew about it. What are the issues? How do you measure it? How should you record it or not record it on a more likely than not scenario? And it's hard to go get all that data. It's hard to make that analysis. It makes the tax department have to communicate with the financial reporting department, if you will. And whether it's in small companies or big companies. It also, when you have foreign tax issues, you have to get into the minds of the foreign tax regulators and determine what their outlook would be as you disclose and or measure and report those. That is a hard process for many companies. It's simple for many companies as well. We could not get home fundamentally on providing an excuse to not set up a liability where it's material to a company for that reason. So we tabled it. We're asking for more input. We're hoping to get more input from the roundtable town hall process as well as people like yourself, and we will resurface it if we see good reason or need to do so. Then we got into VIEs, we got into plain vanilla interest rate swaps and intangible assets and goodwill, and we took that research and we came up with some fairly definitive proposals now, and I've read the first 3 audit accounting standard updates yesterday as they were sent to me as a draft. They're each 30 pages long, and my first comment was, if you're going to have 10 pages or more, I got to have pictures. It's too dang long. So we're going to try to cut it down a little bit. But we made decisions, we made some relative decisions on the definition of a non-public entity, which is as you would probably define a non-registrant. When you get into certain debt obligations, it gets a little dicey, but basically if there's a public market, a public expectation of knowledge, that would not fit the non-public definition. We've talked about going concerns, that project. We've been involved in a revenue recognition project. As I mentioned earlier, we're supposed to do look-backs on existing standards, and I didn't finish that idea. We're also supposed to look at existing projects that the FASB have in process, as well as those that they're about to take up. So we got into these issues, the going concern project, the definition of non-public entity. We got into revenue recognition. We're looking at leases right now. And then any other things that come out of the EITF, for example, allocation or push down accounting in certain circumstances. We're into those current on a prospective basis, as well as the ones we're looking at on a look-back basis. The first issue there on that you can read, and that has to do with what? Which one is that? Accounting for? Oh, okay. Here's what we did on goodwill and tangible assets. I don't know why it takes so long to do this. We just got around to deciding that intangible assets. You got 2 things in purchase accounting when you buy a company. You got day 1, which is how you allocate everything. Day 2 is how you amortize it. Day 1. We have very complex allocation of purchase price to intangible assets that people that drive Ferraris invent on the weekend. And they come to companies and they say, do you realize that you have a great market in the Southeast region? I mentioned Southeast. You know, it could be any conference, but Southeast is what I mentioned, Carlos. And that recognition you have in the marketplace, it's really worth something. And I think I can find somebody that'll give you a valuation on that. So it's an intangible asset. And things like that work their way into accounting and accounting reporting. And it's costly because it means that every time you issue financials, you got to have an update or a valuation report. And the cost benefit was just not there. And so a lot of that angst now is manifested in a proposed rule that says intangible assets have to be supported by a piece of paper, a right, a contract, a trademark, a document. And when you get that document, guess what? It's a lot easier to value it than it is to value something that's esoteric. The difference goes into goodwill. And we're going to amortize goodwill over 10 years or less. And we're going to subject goodwill to a one-step impairment model instead of the long, lengthy 2-step process that gets you back into valuations and stuff. And it's kind of a revolutionary reversal, if you will, but I think it's going to stick. Why do we pick 10 years instead of 15? There's a lot of debate on that, but SME accounting uses 10. So that's kind of why we settled on that, because IFRS for SMEs uses 10, and it was smaller than 15, which the IRS uses. I like 15 because there's no book tax differences. But that could moderate in the final pronouncement, but I think amortization of goodwill will come out of this statement, will come out with this statement. The one-step impairment test will come out, and then a more simplified, understandable allocation to intangible assets with a lot less cost around it will also evolve. That'll happen. Accounting for receivable variable pay. I'm not a derivative hedge guy, okay? I was just born too early for that stuff and had too many other things to do in life besides become a real bigwig on the topic. But what happens today is if your company or you as an individual with a company go out to borrow money, you're not going to get anything but variable rate debt if you go out beyond 3, 4, 5 years. You may get a fixed rate with a balloon in 5 years, but you're going to probably get variable rate debt. Why? Because all the banks, particularly community banks, just can't stomach the risk that has in the markets and everything. So debt out there for companies has all been getting hedged. If you go get a variable rate debt, you're going to have to go hedge it to lock in your risk. So what we did, we put a circle around debt from a single lender with a single counterparty that's meant to hedge or to lock in that rate over the term of that debt, and we drew a circle around it and said that's in substance fixed rate debt. So we take a whole lot of accounting contingencies and things like that out of the private company's domain when you have just a simple attempt, because of the markets, to lock in a rate. Now, if you're going to go into hieroglyphics and have different tranches where we're going to lock in a rate for 2 years, then we're going to go do this with this entity, if you're going to play that dance, you're going to have to account for that dance. And so that's what we're trying to do, is simplify this process that has evolved over time, that we can certainly understand is out there. Now, that was receivable pay. What was the other one? Oh, those are the two. There's really two ASUs in this issue number one. One is goodwill amortization and impairment. The other is allocation of to the intangibles, and then the issue on received variable pay. Why only those two issues were approved? We ran out of time. Remember, the FASB meets with us. We discussed this. We debated it. I don't expect a whole lot of changes to this proposal by the FASB. The next issue that's on the table, ready for us to discuss at the July 15th meeting, is applying VIE accounting guidance to leasing arrangements. For estate tax purposes and other good reasons, owners of a business will put their plant and equipment in one entity and the operations in another. Under the VIE accounting definition, it has to be consolidated. Sometimes it's costly to do so, and it's not relevant to the financial position of the entity. We're going to draw a circle around those related party type items, whether they're explicit or implicit. We're going to draw a circle around those and exclude those from VIE accounting. We also are getting a promise from the FASB to go back and restudy VIEs altogether today, now that we're 5, 6, 8, 10 years hence from Enron and all the off-balance sheet vehicles that are out there. We're asking them to go back and revisit VIE accounting, and that will help them if they need us to. We're also have on a pre-agenda coming up stock-based compensation and development stage enterprises, the latter of which the SEC told the FASB staff we got the same problem. So we're going to probably make that a FASB project as opposed to a PCC project, and we'll get out of some of the development stage enterprise issues that really have kind of evolved. And so those are the kind of the next steps that I would expect to see in the, I'm almost done. I mentioned roundtable town halls. Obviously, my concern and our concern as a PCC is getting good input. We are addressing what I call the low-hanging fruit. We are trying to now begin to see what the real harder issues are and get into those. It's a long process, but I think this first couple of months in dealing with these issues and working with the FASB gives me a lot of optimism that we're kind of on the right path, and the FASB is actualized along the same path as well. A lot of different topics, including OCI accounting, fair value level 3 accounting. You can go on and on and on. There's a lot of angst out there that we're going to be opening the can on and looking at. And I would just suggest you just stay tuned and send us in a short email of your concerns, because to me, to anybody, it's very open. We've got to do that. I'm done.